Good afternoon, class. My name is Idowu Agmade from Client Relationship Unit, and today I'm going to be talking to you about accrued expense. So, under accrued expense, we are going to look at the introduction. We're also going to look at the examples of accrued expense and the journal entries that are meant to be recorded when accrued expense are incurred. So, let's start from slide 3. So, you say introduction of accrued expense. So, you say accrued expense are expenses that have been incurred but not yet paid for, meaning that you've gotten the goods but money has not been paid, cash has not been exchanged for that goods you've gotten. So we said, to put it in another way, an accrued expense is paid after being recorded on the books. So it means that it said accrued expense is paid after being recorded on the book. So meaning that we do the recording first, then after the recording, then we now make the payment. So payment comes after we've recorded it in our books. So we said every adjusting entry for accrued expense debits an expense account, increasing expense on the income statement. So whenever we record accrued expense into our book, what it does is that it increases our expense and it reduces our net income, because expenses reduces income. And where do we now credit when accrued expense is debited? We credit a payable account, which increases the liability on the balance sheet of the company. So we say accrued expense are used to increase the accuracy of the financial statement so that expenses are more closely aligned with those revenue with which they are associated. So we now do like a merging of the expense and the revenue to know how much we are going to have within a particular period of time. So let's look at the examples now. So one of the examples we are going to look at is that example of accrued expense and their journal entry. So I just highlighted these few ones. One of them is office supplies receive, and there is no supplier invoice as of month end. So what does that one mean? Meaning that we have an office stuff we need to, maybe like envelopes, like stamp, any office equipment you can think about, meaning that we've received them from our supplier but we've not made payment as at the end of the month. So how is that one going to happen? We said that we are going to debit office suppliers expense and we are going to credit accrued expense. So I just do this one, but in the next slide we are going to see how the journal entries work out. I'm going to show you everything on the journal entry, how they are going to be recorded as we are receiving those stuff. So the second thing we are also going to be looking is employees hours worked but not paid as of month end. Do you see? So we've also put the narration there, I mean the posting there: debit to wages and expense, credits accrued expense. So as I said earlier on, we are going to look at them under the journal entries, how they are going to work. So we are also going to look at income tax are accrued based on income earned. So how is the posting going to be? We are going to debit income tax expense and we are going to credit accrued expense. Do you see? So now look at this one. That's interest owed but not yet paid on borrowed fund. Do you see? So this one now saying that debit interest expense, then you will credit interest payable. Look at the next one. To say rent owed but not yet paid. Look at the next one. To say salaries and wages owed but not yet paid. If you look at the last theory scenario, is different from the first theory. The first theory was talking about receiving. Do you get? But the last one was talking about owing. So if you look at the posting, you see that majorly on the first part we are crediting the accrued expense, but on the other part, if you look at it, we are debiting more of the interest expense. So let's look at how they are going to reflect in our journals. So we take the first example. So the first example is that office supplies receives and there is no supplier invoice as at the end of the month. So how are we going to record it? Look at the first one. It said office supply will be debited with the actual amount and accrued expense will also be credited. So what will the narration be? The narration is going to be being amount of office suppliers received and there is no supplier invoice as of month end. So that's what the narration is going to be. Do you see? That's how the narration is going to be. So let's look at the second one. Let's take the second question. It said employee hours work but not paid as of month end. So meaning that this employee, they've worked from the beginning of the month to the end of the end of the month, but they've not been paid. So are we going to treat it? We are going to debit wages expense, and we are going to credit accrued expense. So that's how we are. So on assumption that payment is now made, do you get? So when payment is made, there is now another entry. But let me just tell you the entry. So when payment is made, what is going to be done in the next feature is that the accrued expense is going to be debited and the staff's account are going to be credited. So that's how we are going to treat that one. So let's look at the third scenario. Third scenario is income tax are accrued based on income earned. Do you see? So let's look at how do we treat it on the. You say income tax expense is going to be what? Debited, and accrued expense is what? Going to be what? Credited. So do you see the narration? Say being amount of tax that are accrued based on income earned. So these are the journal entries. So let's look at number 4. It said interest owed but not yet paid on borrower's fund. So how are we going to treat that one? Look at number 4. It said interest expense is what? Going to be debited, and interest payable is what? Going to be credited. Being amount of interest owed but not yet paid on borrower's fund. So whenever we pay this money, what we just do is that we just debit the interest expense. Then stem nail it off. Interest expense, interest payable. We just debit it, then it goes back to 0. Then we credit where we need to credit. You see? So let's check number 5. He said rent owned but not. Look at it. Look at it. Said rent owed but not yet paid. So when this is done, what is the entry you are going to pass? Look at number 5. Said rent expense is going to be debited and rent payable is going to be what? Credited. Being amount of rent owed but not yet paid. That's just going to be the narration. Very short and precise. So number 6. Let's check. It said for number 6, it said salaries and wages expense owed but not yet paid. Meaning that you are owing salary and wages you've not yet paid. So how are we going to record in our journal? It's going to be salary and wages expenses debited, salary and wages payable what? Credited. So when we are ready to pay the money, all we just need to debit salary and wages payable to nail it off to 0, and we credit the salaries and wages staff's account. So those are the entries that are involved in accrued expenses. Thank you very much. My name still remains Idowu Agumiade of CRM unit. In case you need any question, you can walk up to me and I'm going to help you out. Thank you very much and have a wonderful day.